All right. Let me see. Is my head showing? Okay, cool. Hi everyone. This is Thursday. It's right before the Labor Day weekend. Oh my gosh, this is the last holiday before Thanksgiving, so the year is coming to an end pretty quick. Hi Janola, how are you? Thanks for joining. So the year is coming to an end pretty quick. After this Labor Day, then it's gonna be a full run into Q4 and into the end of the year. So I hope everyone is prepared and ready to go into year end. Orlando, how are you? Thanks for joining. Tiffany, how are you? Thank you for joining. So today, as you prepare for year end, I'm gonna talk about how the IRS views your business expenses so that as you're approaching year end, that you can start making preparation for year end. I am great. I am doing wonderful. It's my birthday weekend, so I'm looking forward to the celebration tomorrow. So I always like the extra long weekend because my birthday is August 31st. So I am super excited for that tomorrow. But anyways, thank you for asking. So how the IRS views your business expenses, and this is some of the information that you'll need, and you'll be able to implement it so that you can keep your business return protected. I think one of the things that business owners don't know, or I think just taxpayers in general, that they think that when the return is accepted, that's all that happened, that the IRS approves everything. But normally when you e-file a return, it only means that your EIN, date of birth, and those simple checks matches up in the system pretty much. So there's not a review or anything of your return that's done. They will issue you a refund if you need a refund. If you owe anything, they will send you a letter to say that, okay, hey, send us our money right now, or you're gonna get more interest and penalties. But normally a return getting accepted doesn't mean that they're done with it. After your return is filed, then it takes 3 years. They have 3 years to go ahead and review it and to see if they have any adjustments and send you a letter for an adjustment. So either they send you a letter for an adjustment, or they ask you to come into their office to present, the things that they have questions about. If they send you a letter, it means that it's a pretty simple, okay, we have found these discrepancies. Do you agree or don't you agree? If you agree, you sign that you agree, and they adjust how much you owe or how much you're gonna get refund, whichever way we may go. If they ask you to come in to their office, you know that it's going to be a full-blown audit, so make sure that you're prepared and bring the documentation, and basically, go be prepared and ready, because they're trying to do their job, so you don't want to piss the auditor off by basically wasting your time. So you want to make sure you go prepared. So just some information on how. Hi Courtney, thanks for joining. Hi Raquel, thanks for joining. So how the IRS views business expenses. The first thing is they're trying to figure out, is it business or is it personal? They want to find out if you're writing off things that are personal expenses on your business return. So the big misconception is that all you need during an IRS examination is your bank statement or your credit card statement. So I'll hear business owners say, well, I charge everything on my debit card, or I charge everything on my credit card. So they'll save their bank statements and so forth. But that's actually not true. Regardless if you're using your debit card or your credit card, the only thing that those things show is the amount, the date, and the vendor. They really don't show the details. Say, for example, you went and bought a computer desk on Amazon.com. So your credit card is just going to say Amazon.com, computer desk, $400, and the date that you purchased it. It's not going to say what you actually purchased. The receipt is what you need to show what you actually purchased. So anything that's a large item, large amount, $75 or more, you're going to want to keep receipts for those. So, and this is just basically to prove that whatever expense you're claiming, it's not personal, because that's their number one issue, to try to figure out, are you writing off personal expenses? Because we all know that personal expenses are not deductible. There are times when you can get a portion of your personal expenses to be deductible, and you know, those calculation comes with different documentation. But for the general purpose of a business owner, your mortgage and, you know, all those, you know, your shopping and so forth for your personal life, you know, those are generally not deductible. And that's the number one thing an agent is looking to prove, is whether you're claiming your personal items on your return as being deductible, which you're not. The next thing they're looking at is this thing that they call, is it an ordinary or is it necessary business expenses? So for instance, you have, you know, you're making a lot of money, but for some reason you just always report a loss. So there's, you know, no tax coming out. So that's when the ordinary and necessary, they're gonna skim to make sure that there's no personal stuff. And then they're gonna start looking at the expenses. Are there ordinary expenses that this type of business, for instance, if you're a consultant, are these expenses in line with the expenses that a consultant normally pay? Or, you know, are these expenses really necessary for the business? Because when you're on the audit, they can, you know, whether you can, you know, cry tears that, you know, these are really, really, really business expenses. Sometimes they're able to disallow them if they don't fit in the ordinary and necessary business expense category. And of course, with anything to do with the government, IRS, or any one of those departments, everything is up for interpretation, because even the ordinary and necessary, there's not really a good definition to say this is what the guideline is. So there's no real guideline. So it's always up for negotiation. So if you find yourself in that situation where they're saying that, oh, well, your business expenses are not really necessary for this type of business, make sure that you get some help so that, you know, you can get the deduction for those items if your return is being examined. One of the things they also look at with the ordinary and necessary, are you classifying things correctly? So for instance, they ask you to provide details of your, hi Phil, thanks for joining, details of your, say, marketing expenses. And when you send a detail, they realize that, you know, some of the expenses in that category weren't marketing expenses. So that's when they become a little more leery about your information and may start poking around a little more. So how, when you're looking at your expenses, whatever you paid in money to purchase, that's what the expense is. If you're buying, if you're buying, like, say, you know, if you go to Office Depot or one of those office supply stores and buy, you know, ink and stuff, you know, those are office supplies. You know, you don't put them in different categories to be creative or anything. Like, just keep everything as simple. If you're buying food, it's just food, it's just meals. If you're buying some office furniture, it's just office furniture. Just keep things as simple as possible, as common sense as possible. You should be able to tell what it is based on what you name it, so that there's no confusion if there's any sort of, you know, examination. So those are the things that you're going to think about. And then when it comes to the record keeping part, this is when things can get a little messy, because based on the type of expenses, the record keeping requirement is different. For example, if you're being audited for your travel expenses, then one of the things that you want to make sure that you do is, in order to prove that those expenses are travel expenses, you know, a copy of your plane ticket is not going to fly. You have to have like some kind of itinerary. So if you went to a conference, for example, then, you know, that's one of the documentation that you'll need, that you attended this conference. If you had a meeting with someone, with a business associate in a different state or somewhere, and you guys had a meeting, then, you know, you have that email confirmation to confirm that that meeting took place on that date. So things like that are what they ask for documentation. So in that case, just saving a ticket a copy of your plane ticket or a copy of your hotel ticket does not really fly that it's a business expense. Because remember, the first thing that they're trying to figure out is, are these expenses business or personal? So if you had a meeting, then you want to save the email for that meeting. If you went to a conference, then you want to save the whatever handouts that they gave you for the conference, scan them in, take a picture of it, upload it to your cloud storage, your Dropbox, or whatever you use to make it easy. And then you keep those as your documentation proof that that trip, the main purpose of that trip was for business. Yes, you can do other personal things, but the main purpose was a business, and then you'll be fine from a documentation perspective. So the 4 big items that they're looking for includes to wrap this up is are they business or personal? Is it ordinary and necessary for the type of business that you have? So the different types of businesses comes with different requirements. How are you classifying those items? If there's a lot of miscategorization and there's a lot of messiness going on, then you're just basically shooting yourself in the foot, because it's just going to create more problems for you. They're going to poke around a little more and just give you a harder time. And, documentation, making sure that you have the appropriate documentation for the different type of expenses that you're claiming on your return. When it comes to purchasing anything from Amazon, I can tell you, save everything, because Amazon can be used for business and personal. So anytime you purchase business items on Amazon, save everything. And the really cool thing is, it's all electronic. You're not getting paper receipts, so it's pretty easy for you to save those business items that are in your Amazon account. Probably, in my Amazon account, I have my business credit card plus my personal credit card linked in my Amazon account, so that if I know that I'm buying something for business, then I can check out using my business card. If I'm buying something for personal, I can check out using my personal cards. And so that, I don't have to be making it too difficult from a documentation perspective. And, always keep in mind, to prevent fraud, the one thing that I will say, hi Trina, thanks for joining, the IRS will never call you. So if you receive a phone call that someone's from the Internal Revenue Service, no matter what they say, the IRS will never call you. They're going to send you a lot of letters, and they're going to basically put the ball in your court for you to reach out to them and call. So they're never going to initiate a phone call towards you. If you're under audit and you call your agent, then your agent will call you back. They're not going to leave any information. They're just going to say, we received your call or receive your message and we're calling you back. Please call us back. So they're not going to call your name or anything. They're just going to let you know that, hey, we're trying to get back in touch with you because you called us and we're trying to call you. So if you receive any sort of call, I've heard a few people post about this, that, they're not going to call you. Your state authorities may call you based on the state that you're in, but the IRS will never call you. They're going to keep hammering you with letter for you to respond to them. And the thing that you have to do is just always respond. Normally their letter will have a date on it where you should respond by, so always check it for the date. If you're not able to respond by that date, then all you have to do is call them and ask for an extension. They will give you an extension, and then they're going to send out the next letter to you to say that your extension has been approved, that they'll extend it to a month or so for you to be able to meet the deadline. And as I said, they're just trying to work with you. They're people trying to do their job. So be nice to the agents. Don't be afraid. And just knowing how they view expenses hopefully will help you to get your documentation in order. If you like more information like this, this is more of what I will be talking about in my 4-week program. So this in detail will be covered. Record keeping is the official term for it, where you will learn all the different documentation you will need for different expenses so that you can keep your business expenses protected from IRS audits. And in the case if you get audited, then you'll be able to have like a bulletproof record keeping way that guarantee that your return won't get adjusted. So it's one thing to claim deductions, but you also want to make sure that you have additional that you have the documentation in place. So it's basically getting your business buttoned up. I don't have buttons right now, but it's getting your business buttoned up. So if you're interested in getting a seat in this program, there's still some seats left. Send me a message and I'll be happy to talk with you, and then we can get you signed up. It's a 4-week program. We're gonna be looking at, you know, things that I talked about in this video: record keeping, you know, tax saving strategies, profit margins, how to improve your profit investment strategies, and everything that you will need to implement a long-term financial strategy in your life and in your business. So send me a message if you're interested. If you have any questions about expenses, or if you're a little leery about what expenses to claim and so forth, then you can also send me a message. Hope this information helped, and I'll see you tomorrow.